Hey guys, and welcome to the Working Money channel. So it looks as though the market has taken a bit of a dip right now. You can see that red candlestick on Bitcoin. Bitcoin yesterday was trading at about 27,000, and today we're clocking in at about 26,600. Red volume bar suggests more selling pressure, obviously, than buying pressure. Bringing up XRP too, guys, you can see XRP is also suffering the same fate. So XRP, yesterday was trading above 50 cents. Now we're trading just at about 50 cents. And, when you look, you can tell a lot from this volume, really. When you zoom in here, let me just zoom in and show you guys the volume bars. When XRP was making its way up over here after this intense day that we saw on September the 11th, you could see the volume was actually quite strong. A lot of buying pressure, and that accounted for a lot of this appreciation. But then, boom, one candlestick here, a fairly large red candlestick, but the volume isn't actually that strong. So what this suggests, still significant bearish sentiment in the market. If low volume, for example, can produce such a big price fluctuation in comparison to this bullish time that we saw for XRP, well, I think that speaks volumes. So zooming back out again here, you guys can see trend really hasn't changed too much. But the fear and greed index is actually creeping up a little bit. We're now at 42 for fear and greed. So despite what the market is telling us, people's sentiment is actually going up a little bit over the last 24 hours. You guys can see by and large, crypto market is down by a few points. Top coins like Bitcoin down 1.32, Ethereum's down 2.03, BNB coin down 2.85, XRP also down about 2.09, and all the other major cryptocurrencies are also in the red. So, despite the fact that people are feeling more confident today, it's a bit of a contradictory picture. Nevertheless, guys, these are micro moves in the grand scheme of things. 2023 is shaping up to be a great opportunity to get into more positions at this point. The beginning of the year, we saw some bullish activity. Now the retracement, and even just looking at Bitcoin in that case for a $12,000 Bitcoin, it's not going to happen. And here's why. 94,693 Bitcoin were worth about $2.6 billion, and that's lost forever. 93% of all Bitcoin has now been mined. Rumors of BlackRock secretly buying 12,200 Bitcoin. There's institutions filing for Bitcoin ETFs. Bitcoin market cap is only $530 billion versus gold, which is $13 trillion. Only 6.3% of total Bitcoin supply is left on exchanges. So, guys, that really does denote the fact that people are hodling. Bitcoin halving is in just 200 days, so less than a year away. And Bitcoin supply shock is inevitable. So, to his point here, we're going to basically be following the trends that we've been following over the last several years. Bitcoin's not going any lower, not going to $12,000. The blockchain backer also noted something here, this one courtesy of Michael Branch. XRP breaks out of a key pattern to outperform altcoins. So the blockchain backer is saying XRP could soon outperform other alternative currencies or cryptocurrencies or altcoins as it breaks through this key technical pattern. XRP is outperforming the altcoin market for the first time in history. XRP shattered the 200-week moving average versus the altcoin market. Instead of being measured in dollars, here's the altcoin market measured in XRP, guys. And you can see here on the chart, you can see it is climbing up, but it did actually shatter the 200-week moving average. So he continues by saying, as discussed, a pullback for weeks, pullback. And so we're nearly there. The positive news, XRP, one of the cryptocurrencies that I feel is going to rally more similarly this time around to the other cryptocurrencies, the other altcoins in the market, because of the legal clarity now, because the on and off ramps are now available to Americans. And since the United States is the most voluminous cryptocurrency trading region, well, that's just going to mean more volume for cryptocurrencies like XRP with clarity. Titan of Crypto here also brought this up. Although many altcoins are still bleeding or at critical technical supports, the following chart showing the crypto total market cap excluding Bitcoin and ETH is telling us that this situation won't last forever. We enter the most interesting part of the cycle, the kind of period when fortunes are built. Don't sleep on it. Put the effort in. You will not regret it, guys. And so, I keep telling my patrons, consolidation phase, guys. This is what we're in right now. This is why I started the Patreon back in May. And we're turning the corner on some of the last picks, guys, before we get to that halving period. Only $5 a month. You can follow me on Patreon, patreon.com/workingmoneychannel, where I'm trading my picks and going to be completely transparent with the $10,000 plus portfolio. You're going to see what I'm trading, guys. I'm also going to be opening up my XRP trades, my Bitcoin, and all the other coins that I hold. This was a decision that I've made. I figure, why not just show you guys everything. And so just back to this, okay, consolidation phase. Here's where we're at. Same time in 2019 and early 2020 when we saw the beer flu. That was a bit of a black swan event. Then we started moving up in mid to late 2020 and into 2021. And of course, the rest was history. So here's where we are today. Similar time frame, and the halving is coming in April of 2024. So we only have a little bit of time left to consolidate. With regards to global crypto utility, guys, I saw this coming from Michael Branch here on Twitter. Ripple came out and gave us some statistics about central bank digital currencies and the fact that 9 out of 10, so 90% of central banks are currently investigating the potential for central bank digital currencies. Furthermore, Juniper Research forecasts that CBDC payments will soar to $213 billion by the year 2030, a sentiment echoed in Ripple's new value report. So, that is still 7 years away, almost 6 years away. And we've already seen cryptocurrencies like XRP, take a large chunk of the crypto space. But for all intents and purposes, we ain't seen nothing yet. By 2030, this is when we're going to see the cryptocurrencies that have value really kind of come into their own. And in the meantime, they're going to be appreciating over this coming decade. Ripple's new value report reveals that over 90% of surveyed financial leaders believe digital assets like CBDCs will substantially impact business, finance, and society within the next 3 years. And so, most of the world is on board already. The US still sorting through this with regards to a central bank digital currency. The issue that's on Congress's mind is that they don't want it to be similar to China's CBDC. Tom Emmer just made a recent statement yesterday regarding his bill. Guys, listen to this.
This bill is simple. It halts the efforts of this administrative state under President Biden from issuing a financial surveillance tool that will undermine the American way of life. Unlike decentralized cryptocurrencies, a central bank digital currency is a digital form of sovereign currency that is designed and issued by a government and transacts on a digital ledger that is controlled by that government. In short, a central bank digital currency is a government-controlled, programmable money that, if not designed to emulate cash, could give the federal government the ability to surveil and restrict Americans' transactions. This is not just alarming, it's downright un-American. We've already seen examples of governments weaponizing their financial system against their citizens. In China, the Communist Party is using a central bank digital currency to track the spending habits of its citizens. The data is being used to create a social credit system that rewards or punishes people based on their behavior. Closer to home, in the Western Hemisphere in Canada, the Trudeau administration froze the bank accounts of individuals involved in the 2022 trucker protests. That might work in Canada, that doesn't work here. This appetite for financial surveillance may be gaining a stronghold, unfortunately, right here at home. The White House issued an executive order placing urgency on central bank digital currency research and development, and the agency reports to that executive order have made it clear that the Biden administration is not only itching to create a CBDC, but they are willing to trade Americans' right to financial privacy for a surveillance-style central bank digital currency. We're not going to let this happen. My bill ensures the United States digital currency policy is in the hands of the American people, not the administrative state, so that it reflects our American values of privacy, individual sovereignty, and free market competitiveness. American values. This is what the future global digital economy needs. If not open, permissionless, and private like cash, just like cash, a central bank digital currency is nothing more than a CCP-style surveillance tool that can be weaponized to oppress the American way of life. If China embraces it, it's something worth standing against in this country.
Here, Tom Emmer, taking it another step further, combating the potential of a central bank digital currency. Now, you notice Tom Emmer here was discussing, the issue of control and programmability. This is the core of the problem with central bank digital currencies. And, he's hit the nail right on the head with that. So a great speech here from Tom Emmer in Congress. A not so great response, though, coming from Gary Gensler of the SEC. Mickle here posted this. Gary's not looking so good. Retweeting out Megan's tweet, U.S. Security and Exchange Commission Chair Gary Gensler says a government shutdown would mean normal oversight of markets would be impossible. Listen to Gary Gensler. He just sounds beaten down at this point.
When you take collectively recent court decisions we have seen, how have they made you, Gary Gensler, think differently about regulating this space?
I'll tell you, I think the same thing. It's about ensuring for compliance and protecting the investing public. And this is a field, it kind of reminds me a bit of the 1920s securities markets 100 years ago, where a lot of people were getting hurt. And Congress came along and said, we've got to clean that up. And of course, we had the Great Depression. And the securities laws apply to crypto security tokens. And there's nothing incompatible with those tokens, with the securities laws. Investors still benefit from disclosure, and investors get to choose based on that disclosure. Investors benefit from laws against fraud and manipulation and other conflicts in the markets. And we've just seen so many people hurt and lost their money, hoping for a better future. And there's so many hucksters and fraudsters in this field.
And so nothing any court would say would change your mind on
that? I wish something a court could say which would actually bring the compliance sooner. But this was a field that was built as a global field, so a lot of it's outside of the US. And we have very robust securities laws in this country. Having said that, there are a lot of folks in this field that are trying to say, well, those don't apply.
Boy, it seems as though the SEC's official message is getting less and less clear by the day. What do you guys think of Gary Gensler? He does not sound as confident as he once did. Jeremy Hogan, even mentioning Gary Gensler saying the crypto space is full of hucksters and non-compliant. So then the question is, would anything a court says change your mind? Gary Gensler's response was, well, no, not really. Obviously, he's got an MO. We all know what it is. Brad Garlinghouse has called him out on it several times. XRP Crypto Wolf here saying, so much for checks and balances. I bet Gary Gensler wouldn't even care if the Supreme Court ruled in favor of Ripple. Jeremy Hogan responding, Gensler just likes checks and checks. And even Bill Morgan responding down here, until a court says checkmate. Good line, Bill. Good line. Ashley Prosper even, laughing out loud at this. Looks like a deer in the headlights when he's confronted with the reality of the pushback from the judicial system. Sorry, Gary, were you trying to say something? I couldn't hear you over all the winning. Boom goes the dynamite. So that is the latest from the SEC. Wanted to thank Ashley Prosper, Jeremy Hogan, and Megan here for posting that. Now, Mainnet 2023 is happening right now, and as you guys can see, Brad Garlinghouse making an appearance with some like-minded peers from the XLM camp and the XDC camp. Another great tweet here from Megan. So, this is very emblematic of, what types of cryptos are going to thrive in this marketplace, despite Gary Gensler's attempts to thwart cryptocurrency and to regulate it by enforcement. We're seeing the companies that really matter really thrive. And, I think that this cheerful photo, we got a few photos of Brad Garlinghouse and Stuart Alvarado yesterday, too. I think this really just does sum it up. Speaking of Mainnet, we do have the Blockchain Association CEO, Kay Smith, interviewed about Coinbase and the Ripple case at this event. And guys, here's what she said in a nutshell with regards to the Ripple win.
What's your thought on the recent SEC court losses? I mean, you'll be talking about this on the main stage today. And what are your thoughts on the Coinbase case?
Yeah, no, I'm really excited. I'm going to be sitting down here at Mainnet today with Paul Grewal, who is the Chief Legal Officer of Coinbase. But, it's very interesting because as Congress is working through this legislative gap, filling the legislative gap, we've seen regulatory agencies try to test the limits of the law by using a regulation by enforcement approach. And so they're doing these cases. And what we've seen is, particularly over the summer, Ripple, whose booth is right behind us here, they scored a major win in that XRP is not deemed to be a security. And so we're finding that we're not able to get clarity with the regulatory agencies, but we are able to get some clarity through the courts. And so we're hoping that as the Coinbase case moves through, we'll continue to get additional clarity, which will allow time for Congress to figure out the appropriate framework and get that enacted into law.
I mean, if you can't get it from the regulators, I guess you have to get it from the courts. This is exactly what Smith is saying here. And that's exactly what we're getting. So, she's looking forward to seeing the verdict in the Coinbase case to see how this all shapes up. Now, I mean, the sentiment in the space has been tumultuous at best, maybe downright nasty at worst over the last several months now. I know XRP has not been performing the way people have been wanting, especially since this SEC Ripple lawsuit verdict. And so I get it, tempers are flaring, and there's even been a slew of misinformation being disseminated in the XRP community. Now, I don't know where this originated from, but Crypto Eddie did come out essentially stating, Ripple, there's no way Ripple is abandoning XRP, and, for good reason. So again, I don't know where this originated, but she has come out, clarified her growing view about Ripple ditching XRP and its product offering for businesses, saying that it's not true. In a recent tweet, the influencer proclaimed that Ripple was not abandoning XRP, and I've got the Sentosumo Saba tweet up here. Ripple isn't abandoning XRP. They own billions. So, you just got to think about it for a second. When it makes up a large portion of your net worth, why would you decide to go and abandon it? And, not only that, they've built their model around XRP. So, they're fully committed to XRP. Brad Garlinghouse has gone on the record, I think it was either Brad Garlinghouse or David Schwartz, saying, we have an incentive to keep XRP at a high enough price because, we need it to be utilized for our purposes. Also, we need it to be liquid for, our clients and so on and so forth. This is why they've created Liquidity Hub, and this is why they've created the line of credit, so the notion that Ripple is going to abandon XRP is completely ridiculous. To become an Amazon, one must expand giving clients what they want, i.e. stablecoins. And even just listening to this interview with Navin Gupta back in 2018, I'm just going to play you guys a clip of this. The video kind of blacks out after a while, but listen to this.
We don't convert, so we essentially use an exchange. So for example, Bitstamp is an exchange that we would use in the UK. For example, CoinsPH is an exchange that we will use in Philippines. So these are exchanges with open order book. So we use those open order books to do the conversion.
But you only do it into XRP.
That's currently we only do it in XRP, but the technology itself is neutral. So as more cryptocurrencies evolve and they have enough liquidity pairs, then we will use many other things as well.
Able to use,
absolutely.
And you'll be happy to. Okay.
Yeah. But what we do is when we send cross-border payments, right? So when an institution A sends cross-border payments to institution B, like today we use US dollar. So to give you an example, when GBP moves into Philippines peso, GBP gets converted to US dollar. US dollar gets converted to Philippines peso. Exactly in this case, GBP gets converted to XRP into Philippines peso, but XRP is taken from the public chain, right? But you could do exactly the same thing with GBP into Ethereum, into Philippines peso, GBP into USDC, into Philippines peso.
You could, but you won't, because XRP is the most efficient corridor. And, the guys over there at Ripple have said that too. They've made that very, very clear on the record. I was curious to watch the rest of this video, but it does black out there. Nevertheless, wanted to thank Sentosumo Saba for posting that. I mean, there has been a lot of talk out there about XRP and what it is going to be utilized for. I know a lot of us already have seen many different companies partner up with Ripple and start adopting XRP at a small scale. But this was brought up by Digital Perspectives here, retweeted out by Wall Street Bulls on Twitter. XRP might qualify as a Group 1B crypto asset with stabilization mechanisms. To give you guys some context here, Group 1 crypto assets fulfilling classification conditions, okay? Group 1A, tokenized traditional assets. Group 1B, crypto assets with stabilization mechanisms. But they mention here stable coins, and I know, at first glance, we think about XRP, we don't think that, it's not a stable coin. It obviously fluctuates in price. New guidance on application of current rules to capture the risks relating to stabilization mechanisms with further consideration for capital add-ons. Now, when thinking about this with regards to the automated market makers, as per Digital Perspectives here, so the question is, could this be a mechanism that qualifies XRP a stablecoin and a Cat 1 asset according to the BIS? The BIS Prudential Crypto Asset Treatment, just giving us the definition here. Obviously, it's not a Group 2 crypto asset because they give the definition, for example, of Bitcoin. And then we have AMMs, okay? Automated market makers are agents that pool liquidity stabilized by arbitrageurs. Together, they tighten the slippage in the price, creating fees earned for AMMs and a stable price for XRP while allowing XRP to move freely in an open market, providing a reliable and stable price without having to peg the asset. So this is the function of the AMMs. And we've been asking this to ourselves for a while now, the idea that XRP could become a stablecoin, but I think he's hit it right on the head here, guys. Remember, back in November of 2021, the World Bank Group did come out with this paper, Central Bank Digital Currencies for Cross-Border Payments. And when we go to page 39 here in the report, there's a section right here in plain English, stablecoins for cross-border payments. Could not be clearer than this. And down here, they say they also offer stability with respect to their parity against fiat currencies. Two digital currencies that fall into this category are RippleNet's native digital currency, XRP, and Stellar's native cryptocurrency, XLM. Both Ripple and Stellar enable faster and more efficient cross-border payments relative to correspondent banking under the heading stablecoins for cross-border payments. So, I mean, I guess first, did the World Bank know that the automated market maker mechanism was coming out? Probably. I'm sure, these guys were not left in the dark. Retail is always the last to know. But again, just bringing us back to this Group 1B classification, crypto assets, stabilization mechanisms. It's sounding like it's all making sense. Slippage and arbitrage to minimize slippage with AMMs and pools. This creates a reliable and stable XRP price. We've also heard David Schwartz say, XRP needs to be a high enough price in order for it to facilitate those high value payments. So guys, it's looking like this is all pointing into that direction, the Group 1B classification, crypto assets with stabilization mechanisms. So guys, it wouldn't be just XRP, probably XLM as well. That's just my opinion though. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.